Hi guys, I'm Michael here. In today's video we will be making an overview of a couple of stocks, particularly the Home Depot, eBay and Apple, and at the end we will take a look at the SP 500 and discuss whether it is a correction or what we can expect from the market right now. So let's start maybe from the stock Home Depot, which is one of the stocks that I choose for my monthly portfolio, which this is, if you don't know, this is the monthly project that we have started on this channel. They're basically 4 stocks based on strict criteria, and which I bought, and 4 stocks that were based on very loose, just more or less predictions that could be made about those stocks, and we will discuss at the end of the month how the results went and whether it is a good way to choose the stocks based on those criteria that I prepared for the portfolio, or rather sheer luck sometimes is better. But if you didn't check the video, look for the click on the channels button and look for the previous videos about the trading diary, trading blog. I think you will find those videos without a problem. So let's dig down at the companies that right now I choose for this particular day. And previously we were talking about also Facebook, so if you want to check and know what is going on and whether it will affect the price and what you should do if you have, for example, the stock, or you would like to check if it is a good moment to sell or buy, check the previous video as well. Basically the situation is with the whistleblower, which is testifying in front of the Congress. So I think it's interesting, and I give some good points of view at the current situation. So check also this video. But right now, today I choose Home Depot, eBay and Apple. So let's go down and analyze the current situations that we have on those companies. And firstly, we will talk about the numbers and what is the current situation if we take an account to just fundamentals, the fundamental principles that are, I think, the most important in the long term. So if we take into account, this is the eBay eBay price chart with the blue line, and with this orangey dark orange line is the revenue, which I think it is self-explanatory. As you can see, the revenue was losing momentum over here, but since 2010 it started growing again. But you need to have in mind that Home Depot is a cyclical company, so therefore it is very dependent on the consumers, because it is a retail seller. So the gauges that you need to watch for are, for example, those with concern of the consumer sentiment and consumer spendings, because this company is heavily dependent. Basically, the whole business is about that. So, but if we, take a look at the charts, you can see that, for example, when there was the dot-com bubble, the revenue was growing, but in 2008, when we had the GFC, the Great Financial Crisis, the revenue started to fall, and when we started 2010, up until now, the revenues were steadily growing, and in 2020, when we had the pandemic, they just skyrocketed. At the current moment, the revenues are 8%. They growth 8% year to year, and basically the company situation is very stable. If we take a look at the earnings per share, let's change the color for that. The EPS without a one-time event. Let's choose maybe the green color. So basically these are how much company paid per 1 share, and as you can see, it is also steadily growing. Therefore you see that the company is increasing its dividends, and therefore it is the company should be in good condition. And of course, then you need to check the margin that company is operating on. So let's go for the summary. Let's go for the operating margin. At the moment, the operating margin is 16.15%, and it is steadily slowing, but it is still, if we check the gauges, it is still where we have that information. Yes, the operating margin is ranked higher than 80% of the 201 companies in the industry. So they have, compared to the competition, they have high margins. And if you take a look at the gross margin, it is at a 33.23% level. So the business model is simple. We need to take also into account the situations that we have on the labor market, because it will also therefore be increasing or decreasing the consumer spending. So for example, this Friday we have non-farm payrolls, and if there will be lower, significantly lower than the forecast, or even at the same level more or less as the previous one, therefore we could have some potential problem as for the US growth. So next thing that you also need to check is the earnings. So give me a second, because the third quarter has ended in September right now. So in October and in November there will be, the companies will publish their quarterly earnings. So Home Depot, let's check when the company is at November 16th. So we will have to wait along. So we will have to wait a bit for the third quarter earnings. And if we take a look at the recent chart, this is a daily time frame. We see this 2020, and it is the beginning of the 2021, when the economy starts to reopen, and therefore the share price just skyrocketed along with the revenue. As I talked a minute ago, the revenue growth 8%. You saw all the fundamentals, and as well over here, there are no signs of weakness that the company might decline from this moment. And so basically here we had more or less a 13% correction. Right now we have the second pullback, but we are making higher highs, higher lows. So the direction is just to the upward. And as well over here, as you can see, if we zoom in, we have our trade from our portfolio. Where is the Home Depot? Right here. So on the 1st October, we bought the stock, and therefore we will check at the end of the month how it was going. So okay, maybe now let's switch to next company, which is an eBay, and we can start from talking about the margin, which you can see the gross margin is 74%, which means that it is also a very healthy, very good business model. Because what is a margin? Margin is the profit after a deduction of the operational costs. So now let's just go for other fundamentals, other numbers. Let's check the interactive charts and check how is the revenue and the earnings per share. So if we go for the revenue, we see that after this spike of between 2011 2014, we have a steady growth of the revenue, which is also higher than the revenue from the 2018. So we can see that first, these are good numbers as for the revenue. And if we take into account earnings per share, let's switch that to green color. That is not as stably growing as we would like to see, but the tendency is to the upside. And if we combine that with the growing revenue, I think that is all what we need to see. And as for the changes in their business model, they basically want to achieve that. They want to bring more loyal and more, we can say, much more spending customers. So for example, right now they have the 20% of their customers are making more than 70% of their revenue, of their profit. So they want to focus on more loyal clients that are spending more rather than on one-off clients that are purchasing lower value goods, and they are making just, you know, a one-off purchase. So basically that is what they are trying to achieve right now. And yeah, basically that is all as for the business model, because I think it is crucial, it is important. I don't know if you have noticed, but recently, in recent months, I saw that they are trying to market, to push for example, their shop with luxury watches, that they are selling you know, luxury watches brands with the authenticity certificates. Okay, now let us switch to Apple, the last company that we will be talking about. And in the orange line is the revenue, and this green one is the earnings per share without one-off events. So basically, as you can see, revenue is growing more than a decade right now. Their earnings per share are also growing. So as for the fundamentals, the company situation is very stable. And let's go also for the summary and to check the operating margin. Right now we see that the operating margin is at a 29% level and the gross margin is at a 43% level. So you can see that it is a very stable business model, and we can predict that, for example, right now, if we compare it to the previous year, to the 2019, to the September, from that moment the margin started to grow. So based on that prediction, we can even say that the earnings will be bigger, because if the revenue is growing, I was talking about it also previously, when the revenue is growing, when the margin is growing, therefore the earnings themselves will grow even more. Let's switch to the earnings calendar and to check when Apple will publish their quarterly earnings. So let's check. It will be on November 4th. So we have still less than a month. Need to wait for the third quarter earnings. But what I also need to mention is that Apple, for example, has very big ROE, return on equity, which is basically that the thing that I was talking about previously in previous videos, that this is one of those companies that has higher returns from their capital, which basically means in the situations like this, when we have the low interest rates and easy access to the capital, those companies will just blow up. And as you can see, basically that is what happened in recent decade, more than a decade even. And the thing is that if we are talking about the longer portfolio, I wanted to mention, as for the Apple, that when the interest rates starts to rise, when the cost of capital starts to rise, cost of you know, manufacturing and so on, that's basically what we are seeing right now, that is happening. And only strong brands like Apple will, we can say, go through this hard period without a bigger scratch, because basically the strong brand is the brand that can, for example, because the strong brand let the company to charge people more for their products, and basically all the costs that they were paying more for the materials and the manufacturing, they can let the clients pay for that. So the companies that will do the best during the, you know, we can say hard times, I don't know, bear market, whatever you want to call it, are those with the strong brands, which will be able to charge more to their customers. And basically that is why all the technological companies have, you know, developed in recent years, because they are scalable, very good. So if you have like a physical store, you have you are, you know, basically ograniczone, jak jest kurwa ograniczone, no, limited. And this is basically why tech companies have grown so much during last decade, for example, or more than even a decade, because they are not limited by the physical location. So if you have the Netflix, even the Apple, which is selling goods, but they are doing it remotely, and basically, this is the reason why tech companies were growing so much during the last decade, because they are not limited by the physical locations, for example. And they have high margins, and they basically have a very high return on equity, return on their capital. So and therefore it was easy for them to scale, because they are just goods and services that are in ja pierdolę, kurwa! And basically that is why the tech companies were growing so much during the last decade, at least, because they are not tied up to the physical locations, and they could easily scale up. All what they needed was capital, which the low interest rates provide them as And this is basically why the tech companies were growing so much, because they had the easy way to scale up, because they are not limited by the physical locations. For example, if you compare it to some, I don't know, mining industry, first thing that they need to raise very high, very high, huge amounts of money. Kurwa! And basically that is why big tech companies were, and basically that is why those tech companies like Apple, Netflix, Google were growing so much, because they had a very high return on their capital. And they ja pierdolę, kurwa. And that is why basically those tech companies had easy way to scale up and grow so much during the last decade, because they have a very high ROE, the return on equity, and return on their capital basically. And what they needed is just capital. And that is why basically the tech companies were growing so much during the last decade, because they are not limited to, for example, the physical locations. They had the high return on their capital, and basically what they were needed is just money, which during the times of low interest rates, it was very easily accessible to them. So that is basically their secret, right? They use the moment well, and that is why we are at the moment on, for example, Nasdaq and S&P. And basically that is why we have those FANGA companies, which is Facebook, Amazon, Apple, Netflix, and Google, right? So and all the terms like Facebook Mafia, etc. And basically that is why the tech companies were growing so much, because they had very high return on their capital. And basically what they needed is just capital, right? So in times of low interest rates, it was very easily accessible to them. And yeah, they just use the moment. And the reason also is that they had a very easy scalable model, because they are not tied up to any locations. Like, for example, Netflix, it's a internet service based only. So yeah, they could grow as much. The only limitations to them is the population of the world, right? And the people that have access to internet. So that's their limitations only. And basically that is why we had the companies like, for example, Facebook, Google, and Netflix right now. So let's talk about the Apple stock chart, Apple stock price chart, but I realized that we also didn't discuss the eBay chart, so let's say a few words about that. But to be honest, we have the similar situation as with the Home Depot. This is also a cyclical company that we should, hodl, we can say, to the late stages of the bull market. And to be honest, right now we don't see any signs of weakness at the moment. So we have steady growth with a couple of pullbacks, minor pullbacks of a couple percents, and there are no signs of the stock to make a bigger correction or have some weakness spot in fundamentals. And if we go to Apple, if we check the chart, we see that this is a H4 time frame, 4-hour time frame. If we even measure the latest growing wave, we have the pullback right now on the 50%, which was respected over here. And also we can see the open trade that I have on Apple right now. As I said, we entered on the 1st of October. It's over here. And yeah, basically that is from my perspective, that was a good moment to enter the market on a long side, rather to look for shorts at the moment, because we are also before the quarterly earnings, and they are expected to be even higher than the estimates. So yeah, at the moment I am long on this company, and there are no signs of some bigger move to the downside. If we even check the left side of the chart, we see clearly that the trend is upward at the moment. So now let's check the SP 500 chart and talk about that. So clearly we can see that the trend is upwards, and even if we measure the current pullback, the current we can even say that it is a correction. It is more of a pullback because it is only a 3% pullback. Correction, it is between 10 and 20%. So this is a very short pullback, and there are no signs of weakness right now. At the moment, we bounced back clearly from the 78.6 Fibo, and we are going to the upside. And as for the reason behind all of this growth, are most likely for most of the analysis and index funds. If you don't know what an index fund is, basically it is an investment fund that mimics the S&P 500 index. So basically, if you have, for example, if you invest $10,000 in such index fund, it basically spreads those $10,000 between all of the 500 companies. So basically, it does all the job for you. If you like to, for example, have all of the 500 companies from the S&P, it basically does the job for you. And it was a very boom for those index funds. They are very popular at the moment in United States because it is a no-brainer. You just put the money in and leave them for I don't know how much years to come. So yeah, that is basically all what I wanted to talk about in this video. Check the previous one where we have started the diary, the project for the stocks for this month. And yeah, see you in the next one. Take care. Bye.